Hello viewers, welcome back to our channel. Welcome back to Humble Traders Trading Desk. Today is Friday, being the last day of the week, and we are actually back on our charts to see how far we have moved and then what is actually currently going on and what we look or expect to happen in the coming week. Thank you for staying with us, and then we appreciate your time and we appreciate the support we're getting from you. Just keep liking our videos, share our link to other subscribers so that we can create a family here. Share our videos, like our content, make comments at the comment sections, because we know that that is the only way that we can interact one-on-one with you and know what exactly you want to be seeing come your way. Now, I've been thinking that because of the potency of this trading system, there is need for us to pay attention to a very important part of it, which I have been saying in most of our content, that there is need to gauge the to know how to gauge the pullbacks. This pullback is not just limited to this trading system. If you are a trader trading the forex or commodities or metals market, you know that pullback is a major challenge to traders. There is need to know what is happening in terms of pullback. If you have a good entry and you have been moving in your trade with peace of mind, at a point price will pause and begin to move in the opposite direction, because this is the behavior of price. It cannot travel in the elevator, it takes the steps. So that means it goes up, comes down, goes up, comes down. Now what happens to you? You need to get into the trade at a comfortable position, at a good position. So that's why you need to know the kind of trading system you are using. With SIWA strategy, it enables you to catch the trend early as it is developing, so that you don't even have to bother about the pullbacks. That is if you are a swing trader, or you are an intermediate trader, or you are actually a position trader. It means once you open your position and you align properly with the direction of the trade, you can even go ahead and be doing other things, travel around the world. Once you know that you can actually come back to your charts after a specific period of time. For example, if you're trading the 1 hour, the 1 month, then every month you can come and check what is happening to your charts. SIWA means study, investigate, wait, attack. So it means if the trading system does not align from the top to the bottom, there is no need for you to get into a particular trade. And it teaches you patience. It teaches you patience. That is what we preach on this channel. To know how to hold on, to stay out of the market, to know how to also engage the market once the opportunity presents itself, so that you don't miss the opportunity. There is nothing like FOMO. You have to just wait, let it present itself, show it stands to you, then you just grab the opportunity and then be in that trade. We have mostly been showing buy setups. We shall browse the channel this weekend and see sell setups, and then we can come here and actually continue to try to explain the strategy to you. But basically this video is to take care of pullbacks, and I'm doing a series. I will do like 3 or 4 videos that will show pullbacks and how to quantify them. Like I said, since we want to learn how to protect our profits, it becomes important for us to understand how to really quantify our pullbacks. I mentioned in previous videos that one of the ways that you gauge the level of pullback is by using the Fibonacci tool. The Fibonacci tool is a powerful tool that helps you to gauge the level of pullbacks using strategic points on the tool. If you pull it up on your charts, you will begin to notice that there are some regions on that same tool that you have to continue monitoring what price is doing as it approaches those regions, whether you are in a buy setup or in a sell setup. So if you are just joining us here, please like our videos, subscribe to the channel, and then turn on the notification button so you don't get to miss any of our content as we post it hot. So let's look at it. Let's not deviate from the main topic. We're just here to quantify the level of learn how to quantify the level of pullback, and also use multi-time frame analysis to fine-tune our entries. I have noticed that if you can master these 2 aspects, then SIWA strategy is already bagged. We already know how to do it, we know how to use it. And if you don't know how to use it, you're just joining us, please visit some of our earliest content you will see, especially the secret sauce. It explains the strategy in summary, and then even previous, more recent videos will still explain to you what the strategy is about, and then you can follow us gradually, but try to practicalize it on your own charts using your mobile or your desktop app. No matter which app you use, we already have settings of the EMAs, and then you can just follow those settings, and then you can have your screen looking like mine and begin to practicalize as you watch our videos. Now, having said that, let me quickly check these indicators, because I'm just using this particular one. I want to see if we have the settings correctly. We are using the 40, and our 40 usually looks green, so let me leave it at green. It is usually exponential, but we are applying them to close. So I have corrected this. Let's go to the second one. It's 9, it's blue, it's to close 3 picks, and the color is blue. This one is okay. Let's go to the third one. It's 21, it's red, apply to close, it's also 3 pixel, it's okay. Let's go to the fourth one. The fourth one is supposed to be the 200 EMA, and it's gray in color. Yeah, and it's exponential apply to close. That's right. And which one is this one? We have the 10. We don't really need this 10, so we are going to actually delete it. Let's just delete it and leave the rest the way they are. And that is what the trading system is about. We have only these indicators on our chart. So before we engage the market, we have to first of all go to the highest time frame and see what price is doing with the EMAs, and then pay attention to what our MFI and the OBV indicator are also showing us at this lower part of the screen. And then once they align properly, we can take an entry. Now, since we are here to gauge level of pullback, look at what SIWA strategy can do to you. Look at it. If you had been in this trade right from this point, first, the strategy says that you should wait for a close above at least the 9-period EMA, and here we have a close above it. After a fall, you can see after a fall. Please take note of this. After a fall, this strategy may not work for you if you went and joined in the middle of a pullback and you just continue to maybe buy when you see a close above an EMA. That may just be a retracement actually. But by the time you look for a good drop. When you get a good drop or a good rise in case of a sell scenario, then at the end you begin to see to know whether how do you join this trend. First that comes to your mind is you want to gauge the level of pullback. Has it reached a region where I should begin to stock entries? If no, you wait. That is what the W in SIWA strategy means. You have to wait. Wait patiently, please. And you are looking at the monthly time frame here, please. So you should know that no matter how tiny a candle is on this time frame, it is still 1 month of trading. That is 20 days. So you can see, if you're a position trader, this is good for you. You can just open one position and just go ahead and travel around the world. Or if you're a lecturer, you can face your academic activities without having much hassles. So now let's look at it. The moment price returned and closed above the 9 EMA, it means this strategy is showing us that we already have a signal here. So now next is for us to wait for a retracement back to the body of that candle. Now that's where the problem is. Look at this candle. Look at the level of retracement that came. If you had joined this candle the moment you saw it going here, your stop loss will not be anywhere as deep as this, and this candle would have taken you out. So the next thing is for you, once you see any retracement happening, just wait and see the deepness of it. And by so doing, how do you do it? You can quickly pull up your Fibonacci retracement tool and drag it from the bottom to the top. If you are having a bullish candle like this one, the green candle here is the bullish candle and the red candle is the bearish candle when price is falling. So since we are looking at a scenario where price is actually rising and we want to see level of pullback into the body of that same candle, we just draw our Fibonacci tool to look like this, and then we can now begin to quantify the level of the the level of that move. You can see, we can't see it properly. Let's shift the tool a bit to the right and we can see, look at the level of this drop. It came to the 78.6 level, which is deep enough. So you can see from here, you have seen that price is already showing sign of going backwards, and then this is our analysis of past price action. You can see if you are joined from here, when price just dropped here, that's your entry for SIWA strategy. You just join here and then place your stop loss to around this bottom here. So you see, since then, if you had done that, you would have been in this trade what? For all this time, look at it. For all this time, you would have been in this trade. There was never a time, price revisited that region. And then it came here and created another high. Look at another high, the next high it created. And then it fell again for 2 months. Did it come to you? No. But it was supported by the what? The 21 period EMA here. Okay, so price also rebalanced and continued high to create this high here. So that's why we said, we noticed that in case you are not a long-term trader, you may find yourself always whipped out of the market. Then quickly go to a higher time frame and see first what is happening. For example, you have seen that on the monthly here, you got a signal, just like in the past where you got a signal, it closed above the what? The blue EMA, which is our lightest EMA, which is the 9 EMA. You got an entry signal here, and then you took the trade, you came here, but there was a pullback, and but maybe by the time you were traveling up here, you have all the while been trailing your stops. If you trail your stops, just when price came up to here, it would have gotten you out of this market. But if you had joined the trade from somewhere around here, when the price had just closed here, you just join the trade here, you must place your stop loss somewhere here, so that even no matter how it came back here, it will not affect you. It will just go back. You just came to the balance here. And there is another strategy that may cause the deepness to be deeper than the previous one. Just here, something happened and the pullback was not as deep as here. Here, like I said in one of my shorts, I think I explained that a complete cycle will cause a deeper retracement than when the cycle is in progress. So you can see at this point, cycle had not yet completed. So look at it, it was just 2 months of pullback. But coming to here, where we had a complete cycle, we had a complete cycle of 144 on weekly, at least, where on the daily here it's showing us like 33 monthly candles. We are seeing a pullback that is so deep. Okay, so you can see where it came up to here, almost clearing anyone who was in this trade. But if you had stayed here under this particular candle here, you wouldn't be affected at all. So you can see the SIWA strategy is so powerful that if you catch it even on higher time frame, you will just be swimming in profit while you endure the pullback. But for a shorter time trader like myself and you, although I enjoy swing trading, but you can just easily maybe when you notice a pullback, you quickly drop, and that is what we are here to show you. We don't want the video to be too lengthy, but we want to show you that after giving us a signal here, because we had a good close above the what? The blue EMA, we cannot just enter. We cannot just enter the trade. We have to go and do other research to see what is actually happening. We need to see a pullback. Price, first of all, pull back. Look at it. Price first of all pulled back to this level on the monthly, but this is just using the horizontal line. If you want to know how deeply it went, in itself it didn't really go deep, but when the next candle opened, it went quickly to break the high of this candle. All this while, you should be an onlooker. Don't join the trade until you see what? Okay, you can see what happened when a bullish candle usually happens. By the time this candle of October closed, the new one that will open will retrace down first for a bullish candle. So look at it, it retraced up to this place. If you are lucky to join here, then fine. You would place your stop loss using your ATR at a good position, 1.5 ATR, subtract it from the low here, and you have your stop loss placement. Then you should be in this trade. You see how it broke the high of the last month's candle, but now it is now in retracement. Now this is where you can lose money, because supposing you join the trade here, supposing you join the trade here, but you couldn't, you saw that it was already progressing in the bullish direction. Coming to the weekly, you just continue to buy, and then price will say that no, I'm not ready to go higher yet, I have unfinished business. Then why do you join me at this point? But it will not tell you, it will just be consuming your money. So the next thing is, you saw this move up, you join, but now price is tracing backward. If you have not joined the trend, you are just seeing it for the first time, you just need to study from the weekly time frame. You move down to the daily where it will be clearer, because you already placed down that candle. Let's see where we place the candle on monthly. We need to place the candle here so that we will see the extent of the retracement, and also use a Fibonacci tool to access that monthly candle, just like we did before for other candles. Look at it, it's showing us that it came to 23.6% Fibonacci retracement level on monthly. So we want to go to the day, to the weekly now, to have a clearer view of what is happening. On this weekly, we just get a significant candle and then adjust our retracement, Fibonacci tool, so that we can read what happened on that time frame too. So we just drag the bottom to 100, just like we have it at the top, and we can see on this weekly candle, I don't know why it's not zooming. You can see on this candle we are seeing the same position we saw on monthly at 23.6 is now showing 38.2 on the weekly chart. So now on the 38 on the weekly chart, we are getting a strong move, a strong Fibonacci level. So if I were you, I will start feeling now it's time to start stocking my entry, because at least we have hit a very strong Fibonacci level. Now let's go to the daily. You can see this is how you quantify pullbacks. Actually, you cannot know the extent, but you wait for it at key points. Mark up your charts at the at 23.6%, 38.2%, 50%, 61.8% of Fibonacci level, up to 70.5 and 78.6%. All these are key levels that you just need to watch out for, where price will show willingness to rally back higher. And then for this one, you can see for this daily, we are seeing a move, and then there is a massive move up. We can also try to check on the daily to see what level of retracement is this on the daily. Wow, look at it, look at it, it's very deep, because it has come to up to the 70%, and it's even what, in between the 78 and 70% Fibonacci retracement level. Now this is what we want to do. We need to wait for price to come into the bullish region of the immediate lower time frame to the time frame that we started analysis from. So we started from monthly, we look for it at the daily, and then it wasn't clear enough, so now we dropped to we came to weekly and analyzed there. When it wasn't clear, we dropped to the daily. So now we are waiting to buy, but where are we waiting at? We are waiting to see it drop at least into the bullish region of this daily candle. Look at this face, it had to come and close this gap here. So look at it, it dropped to the up to between the 50% level, between the 50 the 70.5 and the 78.6 Fibonacci levels, and now it's showing sign of rallying back higher. We can place another horizontal line there and then move to, we can also take off this tool to make our chart look cleaner, and then drop down to 4 hour. You can see like we have been explaining in this strategy, whenever you're looking for entry and you drop to a lower time frame, you also look at what chart candlestick patterns. Look out for bullish or bearish candlestick patterns, as depending on the side of the market you are trading on. And then when you have formations that show you what, that this candle is now recovering from the retracement, you begin to stock or look for more confluences. Like now, if you look at this 4 hourly, the kind of candle pattern that we saw here is what we call the bullish person candlestick pattern. It's a bullish person. We have bearish person candlestick pattern. Now is the bullish person candlestick pattern, and it's also very, very bullish. So now what we can do here, we have seen, but then looking for confluence, we see that we are not seeing any close above any of the indicators. So if you are looking at 4-hourly, you may want to hold on first to see a confluence for price to go and reclaim any of these EMAs, especially the 9-period EMA, which is the lightest. Then, but if you are trading the 1 hour, you must have gotten an entry earlier, because you got an entry here where it closed above the EMA, and then we have a retracement here. That's your entry. Actually, your retracement should be your entry should always be a retracement after you have seen a close above any of the EMAs. Okay, and then you would have been trading. Your stop loss will be somewhere around here, or calculate 1.58 here. Then just remain in your trade and watch the price unfold. Now for our target, we will be targeting the high of this daily candle as our take profit region, our first take profit region. That is for shorter time traders. But for longer time, even when this high is blown out by price, they remain in the trade waiting to see the next one happen. So by that, they will be experiencing more pullbacks, but then since they are in good position, the pullback may never get to them. And you can see all our EMAs are still crossing on the daily, still showing us scenario for a bullish move. Now this is about the how to quantify a pullback. We have started with our commonest pair that we look at here, one of our favorites, which is the USDJPY. We have started with it. I posted the first quantification video on how to actually gauge pullbacks. We have posted it. Next, we'll be looking at another pair, and we'll do like 2 or 3 videos using maybe you can use Bitcoin, gold, and then this is the first one. So we'll have a series of that. After that, we'll do another series for the back testing to see how much pips this trading system can actually catch in the market. I just deemed these pullback videos to be timely, because we need to bear the pullbacks at the back of our minds as we hop onto these trades, so that we don't end up losing the money that we painstakingly get from the market. So in order not to hold on or keep the video rolling for too long, if you're joining us, kindly drop us a like. This is a channel for you, for beginner, for intermediate, for advanced traders. Let's all come here and gather and then keep discussing openly, so that we can keep shedding more light to gray areas as we move towards profitability. So stay tuned with us, and keep your eyes open for our next content. But don't forget to turn on the notifications so you don't miss for when we post new content. Wherever you are in the world, we thank you for being with us. Stay with us all the time, and we shall always move together in success. Until we see you next time, be safe.